In today's video, I just want to show you one of the ratio spread that I've done just a couple of days ago when I'm creating this course. I've done the ratio spread on the SPY. I did it on a quarterly option. I buy one contract of the 244 put and I sell two contracts at a 240 put. And I'll just go over to the Analyze tab, and this is my ratio spread. You can see from here the date is 2nd of March when I do this trade. And this is the ratio spread. If the market go up all the way, then this ratio spread will be making $57. There's no upside risk, but the risk is on the downside. And the break even is here at 235.4, which is pretty close to the current market. The current market is at 238. Let me take a look at the chart. For the SPY on the 2nd of March, we'll be looking at the daily chart. This is the day when I do the trade, which is just last Thursday, and today is Monday. I did the trade when the market was very close to 240. So I initialized a ratio spread by selling 2 at the money, and using the amount of money that I received, I purchased an option at 244 put. That is the result of this ratio spread. There's no upside risk, but the downside we have an unlimited risk. And the range is pretty narrow. The triangle is pretty small. I didn't want to take too much risk on this trade. I have additionally purchased a 240 put that expire on the January 2019. This put has another 18 or 19 months to go. And the price that I pay for this put is $22, which is $2,200. Once I put a check on this will be the risk graph of my current position on all the three. I don't view this as a separate trade. I view this as one whole trade by itself. I have a ratio spread. At the same time, I buy a long put. And the long put that I purchase is at the money, and it expires in January 2019. Now my break even is at 232. And this break even is referring to 31st of March when the front month option expire. It's not talking about January 2019 expiration. It's talking about 31st of March when the option expire. So my downside break even is 232 and my upside is at 242. When I initiate the trade, my personal feel is that the market should stay around this range. I do not expect the market to keep on going higher. I may be wrong. The market can continue to go up and go above my break even on the upside. Initially, when I show the ratio spread, there is no upside risk. But when I put in another long trade, now I do have an upside risk, because if the market continues to go up, the long-term option will be losing money. Now I'm in a position that I have an upside risk and I have a downside risk, but my break even is much wider. It's between here and here. With this kind of combination, there wasn't a name on what is this strategy. It consists of a long-term put option and a ratio spread on the near term. So in option term, there wasn't a name for this strategy. When we become a little bit creative, we can do a lot of things with ratio spread. I'm going to update this trade when I close out the position. I hope the market will stay within this trade. That is where I make my profit. The maximum I could make is when the market expires at 240, I'll be making about $300. If you have any question on this trade or this video, just drop me a message. Thank you.